Bitcoin whale here. Let's see what the chart's telling us today. Bitcoin's down 14.4% on the week. That's the worst weekly print we've had in months. The mood out there's pretty rough right now. Quick recap. Yesterday, I flagged the bear trigger at 63,583. Bitcoin closed at 62,746. That level's been taken out. The bearish scenario is now active. I'm going to update the target on the chart in just a moment. Price is sitting at 62,746. On the 4-hour, we've been carving out what looks like a falling channel over the past few days. I'm going to trace it line by line. Don't take my word for it. Watch how price reacts to each one. Most people on Twitter right now are already positioned and rooting for their trade. Longs want it higher. Shorts want it lower. That's not analysis. That's just bias. We're going to let the chart do the talking. Line 1, the ceiling, descending resistance. I'm anchoring back at the cycle peak around 82,850, then dragging it down to the most recent lower high. Watch where this line lands. A line only earns its spot if price has actually reacted to it. Watch this. Price has come up and tested this line more than 5 times and got turned away every single time. That's 5+ rejections. I'm marking each one on the chart. You don't have to trust me. Just count them yourself. Extended to right now. That line sits around 72,537. Write it down. That's the number bulls actually need to clear. Not a wick, not an intrabar touch. A clean 4-hour close above 72,537. That's the only trigger that counts. Quick note, if these levels are actually useful to you, go ahead and hit subscribe. I'm doing this Bitcoin breakdown every single day. All right, stepping down to the 1-hour. The 4-hour lays out the structure, but the 1-hour is where the actual entry gets defined. On the 1-hour, the recent range runs from around 61,383 at the low end up to 78,080. That's roughly 27%. And right now, price is pressing on the lower edge of that range. Fast-moving averages on the 1-hour. 20 is at 66,046. 50 is at 69,563. Price is under both of them. There's no spin on that. It's bearish, plain and simple. That's what the near-term momentum looks like. Okay, that wraps up the near-term picture. Heading back up to the 4-hour now to finish drawing out the full structure. Back on the 4-hour. Second line, the lower boundary of the channel. I'm anchoring this one at a swing low back near 77,640 from when price was trading much higher and pulling it down through every lower low since. In a downtrend like this, that's a descending channel floor. It moves with price, it's not flat support. This lower line has caught price more than 5 times on the way down. Projected to now, it sits around 63,216. As long as we keep printing lower lows along it, the downtrend is intact, and a clean break below it is where this move speeds up, not where it bottoms. 2 lines on the chart, but 1 line on its own doesn't give you much conviction. Things get more interesting when you start layering other indicators on top of the structure. Right around 66,167, a cluster of my levels converges. That's a confluence zone, not one clean line. When several different methods all land on the same area, that's not a coincidence. That's where everyone is looking. Funds, retail, algos, we all see the same spot. I'll drop a horizontal on it so you can see exactly where it sits. So what does the bigger picture target look like? The pattern measures about $5,210 from top to bottom. And when these structures resolve, price tends to travel that full distance. That's the structural target, the full swing move. I'll give you a tighter intraday entry in a second, but this is what the measured move is pointing at. The historical record backs this up. Inside a falling channel, every pop higher is just a fade opportunity. You sell the rally into the upper line and ride it back down. That stays the playbook until price punches through the upper boundary on a 4-hour close. That break is the only thing that ends the downtrend. So here's how we trade it. 3 scenarios. Scenario 1, bulls break through. A 4-hour close above 72,537. If that triggers, my target is 77,747. That's where I'm taking profit. Scenario 2. Bears take control. A 4-hour close below 60,864. Same logic, other direction. Target is 55,654. Stop goes just above the broken level. Keep the size small. Scenario 3. Honestly, this is probably the most likely one. Neither trigger fires. We just grind sideways inside the range. If that's what happens, you do nothing. Hands off. When the market's compressing like this, being patient is way more profitable than being right. Let the actual trigger come to you. Then size in. Don't preempt it. Don't try to call the bottom. Don't fight what the chart is showing you. Let the market tell you what it's doing. All right, here's the actual trade I'm looking at. This is a short setup. Let me drop to the 1 hour and map out the exact entry, stop, and target. I'm not chasing this lower. I want to short a bounce back up into the 63,000 level. Stop loss at 63,630, just above it. That's where the thesis breaks, no debate. Target is 61,110. That works out to roughly 3.0 to 1 risk reward. And I never force a trade. If the reward isn't clearly bigger than the risk, I walk. This only activates on confirmation. No confirmation, no position. Risk 1% of your account, not your whole stack. If today's breakdown was useful, drop a like on it. It genuinely helps the channel, and it tells me to keep putting these out. That's the full plan. That's exactly how I'm trading Bitcoin today. That's how I'm playing it. Stay disciplined out there, manage your risk, and I'll see you on the next one.